Moving now to Asia, where shares fell today as investors turned to safe haven assets and U.S. futures traded lower after a North Korean missile launch, although major indices were off session lows by the end of the day. Japan's Nikkei 225 retraced some of its initial losses to close down 0.45%. Across the Korean Strait, the Kospi lost 0.23% as investors processed the latest developments on the peninsula. The Australian ASX 200 declined 0.72% to close at 5,669, with the financials and consumer discretionary sub-indices leading losses. The risk of sentiment also appeared to weigh on Greater China markets. The Hang Seng Index slipped 0.32%. Mainland markets were more subdued, with the Shanghai Composite erasing earlier losses to close 0.09%. Above the flat line, and the Shenzhen Composite slid 0.243%. And to all the market news back here in Africa, Kenya's central bank has invited bids for a 5-year treasury bond worth 13 billion shillings and a tap sale. The bank says in a statement the bond will have an average yield rate and coupon of 12.465%, and it will receive bids between August 29 and August 31. At its auction on August 23, the weighted average yield on the bond fell to 12.465% from 12.520% from the last sale of a 5-year bond in June. And Rwanda's Bank of Kigali plans to raise $60 million to about $100 million by next year to expand its business and could list shares on an overseas bourse as part of the plan. Its chief executive officer, Diane Karusisi, says the Rwanda's biggest bank is considering a listing on the Johannesburg, Nairobi, or London stock exchanges. The bank will announce its final decisions on the capital raising before the end of this year. Bank of Kigali's first half pre-tax profit rose 5.6% to 16.7 billion francs, driven by a 16% increase in lending. The bank, founded 51 years ago, operates 79 outlets and an insurance business. The shares were listed on the Rwandan Stock Exchange in 2011. And in South Africa, the construction company there, Basile Red, plans to raise capital through a rights issue, dispose of non-core assets and reduce overheads as part of a restructuring after it reported on Monday it has swung to a half-year loss. South Africa's construction industry has slowed since the country hosted the 2010 Soccer World Cup, as infrastructure spending by President Jacob Zuma's government has stalled and weak commodity prices curbed outlays from the mining industry. In response, Basile Red, which has operations in 6 countries, has merged some of its businesses, cut costs, and exited loss-making operations. Basile Red, which had headline earnings per share of 48.92 cents in 2016, reported a loss of 295.16 cents per share for the 6 months to June. Its net operation loss was 471.1 million rand compared with a 34.4 million rand profit a year earlier. And a German investigation into alleged accounting fraud by senior managers at STEINHOFF'S European operations couldn't have come at a worse time for its top shareholder, Crystal Ways. The South African retail magnate is about to split STEINHOFF'S African business so investors can better judge the value of its faster-growing ones in the United States, Europe, and Australia. He thinks doing so will improve returns for shareholders. But as he forges ahead with the separation next month, news of the fraud probe wiped more than $2 billion off the value of STEINHOFF shares, which are listed in Germany and Johannesburg and were valued at $20 billion. Ways, who owns nearly 22% of STEINHOFF shares, says a report on the investigation by influential German monthly manager magazine, which implicated STEINHOFF chief executive Markus Josti, was devoid of any truth. And Zambia, the improving growth prospects and greater liquidity in its banking system have prompted S&P Global Ratings to tweak its outlook on the country to stable from negative. The credit ratings firm, however, says that this remained hostage to the government sticking to its budget plans and to outside factors over which Lusaka has no control, the international price of copper and rainfall. It also based the move, which accompanied an affirmation of Zambia's non-investment Grade B rating, on an expected deal with the International Monetary Fund by the end of the year. The IMF visited Zambia in July and concluded that the economy was improving, but that revenues were falling short of budget estimates but not spending. It projected real GDP to grow 4% this year compared with 3.4% in 2016. In the meantime, Zambian President Edgar Lungu has told Glencore's Maponi copper mines unit to accept higher electricity prices caused by the removal of state energy subsidies. Copperbelt Energy Corporation, which buys power from the state-owned electricity company and sells it to mines, slashed the supply to Mopani to 94 megawatts from 130 megawatts following a dispute over the new tariffs. Mopani says the power supply restrictions had put its investments at risk and has warned that it might lay off 4,700 staff as a result of the cuts. Mopani has a total workforce of 15,000 employees and produced 129,000 tons of finished copper in the year ended December 2016. We'll take a quick break, and when we come back, we'll look at what's happening in the commodity market. Do stay with us.